Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about Sundial once more, SNDL. I've covered quite a good amount of these in terms of due diligence in previous videos. If you would like to watch them, you find it in the description below. Make sure to drop a like to this video to help this channel grow, subscribe, and leave notifications on, and let's jump right into this one. So, Sundial. We do have a quick update here, but before doing so, I need to go a little bit into a piece of information that was hinted at us all the way back from January 11th. Sundial plans to providing additional offerings in the first quarter 2021, including Top Leaf's Origin, Gold Goat Bubble Hash, and Grasslands Stevia and Indica Hash. Now, we already know from previous news, for instance, that there is more products being launched, etc. There is some already going ahead under its premium program as well, so it's amazing. Now, quickly going on through a bit of the SEC filings we've received recently, and this one is a big one, and I did talk about it before. It's the $400 million offering that is yet to come. Now, it will be under equity distribution agreement. It will be sold by AGP Alliance Global Partners, and it will go ahead from time to time. So that is something to really consider about. They do have to reach compliance by June 28th, 2021, my bad. And so we still have time on there, but you can expect that there is probably going to happen as an offering. Now, what to expect from an offering? Well, we do have a bit of idea of what to expect for an offering in terms of what it will do. But before that, institutional buyers seems to be bullish onto this one, and that's always a good thing. Now, if you would like to go ahead and check their finances, you'll go ahead to Yahoo Finance, and basically we're going to go to Sundial and double check a bit of statistics. Now, I've done this quite a times before. I'm just showing you exactly how to get there. I had some questions on how to get to this page. So statistically wise, we don't have price over book here or price over sales. Sometimes you don't have these available. You can find them on places like Finviz, even though they're not accurate much. Now, in terms of cash flow, if you go to quarterly, you get to see that, oh, sorry, my balance sheet, my bad. You get to see that their total cash is sitting around 21 million. Total assets around 227 and total liabilities 151. Now, speaking of which, if they go ahead with that $400 million offering, they're going to have a lot of cash to strategically perhaps expand to the US, etc., and then as well to pay off their debt. Now, I did cover in depth the MORE Act, people coming on towards the Committee of Finance, where the MORE Act is, and what's the future catalyst coming up for the MORE Act, which is decriminalizing marijuana in the US. You'll find that in the previous video. I don't want to be repetitive about this one. Now, we covered a little bit of the updates towards Sundial, and here comes in a bit more of the fun part regarding their technical analysis. If you haven't done so, please make sure to actually subscribe and leave notifications on. It really helps my channel quite a big time, and you don't even imagine how. Now, Sundial here on technical analysis. This is very important to try to get a perspective on the trader's psychology. So, going on towards the moving averages, things were looking a bit bearish. Currently, it is on the 1 week perspective, fighting with that bearish to overcome as bullish. 30 EMA is above the 10 SMA. That's a good sign. It is currently below the 50 SMA. Now, on the ADX perspective, you get to see it is on the verge of starting a new trend. It's around 3109. Now, William percent R is retracting a little, and so is the MACD. So we need to look a little bit in depth on what's happening on a 1 day perspective to get a bit of a better understanding of this one. So on the MACD, it's actually gone negative. That's a very dangerous sign. It's slipping away from the trading action zone between the 10 SMA and the 30 EMA. And however, you get to see a golden cross is forming here in the next few days, if it actually starts to bounce. But from everything we see, momentum is sliding down heavily, MACD is going down, William percent R is highly oversold, and the ADX is slipping. So that is a major news there, and that really does show you a bit of what we're expecting of perhaps continuous drop. Now here on a 2-hour perspective, what we get to see is things aren't looking that much better. Things are still sliding. It's not looking that much better. 50 SMA is above the price point, and that is bearish. Next thing is 30 EMA is above the 10 SMA. And so all that stuff aren't showing really a good expectation there. Now the next thing here, well, actually everything else looks either sloppy or bearish, so I'm not going to cover that. Next thing is the moving averages. So you can expect this one to actually trade 67 cents on the top, 61 in the middle, and 56 in the bottom. Stochastic fast and stochastic slower both showing a pullback here before it starts accumulating. It doesn't show that this is the bottom, but on the Fibonacci retracements, it does show that 55 cents is a very much of a significant support, following 45, following 33, following 14 cents. Significant resistance sits at 64 cents, 78 cents, and 95 cents. Now, quickly going on through basically price points for significant supports, we're definitely at a significant support at the 55 cents. Below there, we're looking at the 50 cents mark. Below there, we're looking at 46. Below there, 42. Below there, 37. 29, and 24. Significant resistances lie at 60 cents, 63 cents, 71 cents, 75, and then up all the way to 82. Now, before going on to what I think about it, please actually consider subscribing. It really helps my channel a lot. If you would like to join our Discord channel, which basically is only nothing more than a chat room there, where we chat throughout the day, please make sure to do so. It's pump free zone. Now, a quick question to discuss this one here. First off, is are they actually overpriced? Are they in trouble? Well, there is a bit of different financials, for instance, the total debt, but an offering would probably solve this, and it would fix the price over book as their assets would increase substantially. Now, the offering probably would come somewhere around the 50 cents as it historically did. And that definitely would bring the price point down. Now, if you're trading this might be a little bit of a harsh truth for it, because they do need perhaps an offering to fix up their price point. Now, I did previously mention that, okay, we do have somewhat of a trend line forming around here, and we need to make sure that we're actually above it. And you get to see we are approaching around the bottom. So if I was just to draw a simple trend line, from this one here, from these 2 points, or multiple points, we've actually missed the cut. But if you go down from 138 cents and touch it here, you are sitting for that trend line around 53 cents. A breakthrough there would be a bit more catastrophic. Now, in my own perspective, I do think that it probably would drop a little, starts accumulating once more around 50 cents until the more act does drop in the Senate, and then from there you can easily see back $1. Now, when I say drop, I mean reintroduced into the Senate after it goes through the financial committee and gets a vote on. In general, I do think that this stock would probably see a bit more of a high in the longer run, but they need to as well to get a bit more perspective on their offering and as well their compliance. Now, just a quick note. From 2019 August, it was $13.22, and it's dropped all the way down to around 14 cents as a low, and then back at 56. So that gives you a perspective on the price action in the longer run. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.